Hi guys, this is Lee with the Market Sense for the week of September 10th, 2019. The charts in this presentation are from the Trade Navigator software that's put out by Gettess. And this is a weekly bond market chart. And you can see after this big rally up here and a little bit of sideways, something has changed here. That's a pretty sizable break. We were kind of looking at support in the, well, let's just call it the 163 area, and that hasn't provided any support at all. They have broken down hard, and the hard part about this is we can go all the way down here to the mid-Keltner channel, which is in the 156 area, just above 156. And that coincides with the highs of this sideways period back here, which, pure chart analysis, when a market breaks out, that's what it's normally going to do. Be an old hound dog, go back and sniff and see what it did. This is what I broke out from, let's check it out. That's normally what it will do, even if it's going to continue to trend up. So they could break another 5-6 points from where they are now, and that wouldn't necessarily mean the trend is down, which is, well, it's just kind of ludicrous to think of it that way, but that's kind of the way it is. We would have really liked to at least seen them get to the 164.24 area. That's where this middle moving average is here, but they actually opened lower and just never went up at all this week. So that is certainly how energy in a market changes. It's how support starts to break. So everything here looks like they could possibly go lower, but with the only identifiable support so much lower, they could turn off of something here and bounce back up, and it's just not predictable. It just turned in air as far as we're concerned, because there's just so much room there. And that's kind of what happens when a market moves very rapidly. You just get sort of random stuff, and that's probably what they're doing this week. I don't really expect them to get to the 156 area. But if they do, that's kind of where the best support is. So we'll just have to see how hard they really break this week and try to deal with them from there. Now in stocks, we have a rather interesting situation, I think. After last week showed enough strength to close above the upper moving average and the projected high, that leaves a situation where this week's moving average of the highs, which is in the 29.58 area, that can act as support to propel them if they're going to trend up strongly. Now, I said 29.58. Tuesday's low was 29.57 and a quarter. So that certainly is close enough. They came up there nicely off of that at the close. So the possibility is for them to continue to rally and rally strongly this week. The projected high, and that's the blue line up here that we're looking at, is in the 3017 area. That is certainly a possibility. And, if they're going to go that far, the old highs, 3030 would be a new high. Can't rule that out. That's very possible if they're going to rally strongly. Now, as I am a little tired of saying, but it's so true, they're also one tweet away from taking out these lows. I mean, all they need is one thing they don't like about the Chinese trade deal or what have you, and kaboom, we're in trouble. But at this point, even if that 29.58 doesn't hold, the middle moving average, which is the green line here, right in here, is around 29.07. They shouldn't get down there, though. The way they looked like they held here, if they're going to go up, they should just go up. If they go back down to 29.07, I wouldn't be as excited about them rallying from there. This is the best opportunity for them to go up, and that's what I'm kind of looking to see if they can do right now, and I kind of think they might. Again, news is the problem they have. Will they get something bad from China in particular, or something nasty between the Federal Reserve and the president that upsets them? But for now, they look pretty good. So that's what we've got for you today. I hope you can find something profitable to get yourself into.